Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak, your podcast available every morning on Apple, Spotify or wherever you listen. It's Monday the 28th of April in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, investors rush to protect themselves from more pain after a double hit from dollar and US equity weakness.
Cargo shipments from China to the US plummet as America confronts a looming supply shock.
Plus, as Europe rearms, private equity firms are scouring for investment opportunities in a defence sector they once shunned.
Let's start with a roundup of our top stories.
Investors around the world who bought dollars to invest in US stocks are facing significant losses as both the S&P 500 and the dollar decline simultaneously. They're now rushing to protect themselves from further declines. With more, here's Bloomberg's Chris Pitt.
For years, it was the money-minting trade for investors in London, Paris and Tokyo. Buy dollars and pour the proceeds into the S&P 500 and Nasdaq. That trade unravelled quickly, though, after President Donald Trump launched his global trade war, sending shockwaves across markets. A 6% drop in the S&P 500 this year has ballooned into a 14% loss for investors measuring returns in euros and yen. The losses have left investors scrambling to hedge their American equity portfolios against further dollar weakness. Meanwhile, Bank of America strategists estimate that a return to pre-pandemic hedging levels could mean an additional $5 trillion in foreign US equity exposure being covered. In London, Chris Pitt, Bloomberg Radio.
The number of ships heading to the US from China has plunged by about 40% since the United States raised tariffs to triple digits in early April. Ship tracking data compiled by Bloomberg shows those vessels are carrying roughly 320,000 containers. That's about a third fewer than immediately after President Trump announced plans to hike tariffs on nearly all Chinese goods to 145%. Deborah Elms is head of trade policy at the Hinrich Foundation.
You're already seeing shortages happening. We've already seen a number of ship sailings that have been canceled. Ports on the west coast of the United States that are traditionally receiving a lot of goods out of China in particular, now no longer receiving goods or shortly to be emptied, essentially. And, that is going to have an impact on consumers already in the United States. That's just going to escalate.
Deborah Elm speaking there. As forecasters surveyed by Bloomberg expect imports to fall at a 7% annual rate in the second quarter, which would be the biggest drop since the onset of the COVID-19 pandemic.
As the US confronts the growing prospect of a China supply shock, the Trump administration is signalling that Asian countries such as South Korea, Japan and India are leading the way in tariff negotiations. Speaking to ABC's This Week programme, US Treasury Secretary Scott Bessent said nations in the region are preparing to make significant concessions to secure a deal.
We've had several of these Asian countries that come in and said, oh, well, we'll stop doing this, this, and this. And I look at these lists and I think, how did we get here? How did we get here? Because this trading system has been so unfair. And as President Trump says, I don't blame the countries. I blame the previous administrations that let them get away with it.
Scott Bessent also told ABC's This Week that there are 18 important US trading partners, including China, which is undergoing a special negotiation, adding that some of these are moving along very well, especially with the Asian countries.
UK economic growth is likely to be derailed by the global trade war. That's according to the EY Item Club, which has downgraded its GDP forecast, saying that it will now expect the UK to grow by 0.9% next year. That's nearly half what it had previously forecast. The shift comes after the UK government said that it held positive and upbeat talks with US Treasury Secretary Scott Bessent about a possible trade deal.
Canadians are going to the polls today in an election that's been overshadowed by Donald Trump. The incumbent Liberal Party had faced near certain defeat before Trump's threats to annex the country supercharged their polling performance. Leader Mark Carney has vowed to fight back against the US.
President Trump's trade war has literally ruptured the global economy and he has betrayed Canada, America's neighbor, America's closest friend, and most steadfast ally.
A former central banker, Carney now has a narrow lead in opinion polls over the favourite a few months ago, the Conservative Pierre Poilievre. Poilievre has built his campaign on attacking the government's economic management and the cost of living crisis. Whoever wins, economists predict Canada's next Prime Minister is set to inherit a stagnant economy facing tariffs from its closest trading partner.
Staying with Canada, Vancouver police say that a fatal car attack that took place on the weekend was not terrorism. The statement comes after 11 people were killed and dozens injured after a driver ploughed into a crowd at a street festival on Saturday. The suspect, a lone 30-year-old man, was arrested at the scene. Acting Police Chief Steve Rye says the incident is one of the most serious in Vancouver's history.
This is a tragedy the likes of which the city has never experienced before. 11 people have now died. Their ages range from 5 to 65. Dozens more are injured, some critically, and some have not yet been identified.
Vancouver's police officer Steve Rye speaking there. According to his department, the investigation will continue, but there is no ongoing danger to the public.
And in sports news, Liverpool have won the English Premier League Championship, earning a record equalling 20th top-flight title. They confirmed the victory with a 5-1 win over Tottenham Hotspur at Anfield yesterday, matching the achievement of rivals Manchester United. Speaking after the match, Liverpool manager onslaught praised the club's ethos.
The quality the players have was, I think, obvious for everyone. But the culture of hard work, the culture of not only from the players but also from the staff members have been incredible, and that is one of the reasons why we could achieve what we've achieved this season.
Liverpool's Arne Slot there, who is now the first Dutch manager to win a Premier League championship. This is the club's second Premier League victory in 5 years after capturing the title in 2020 without any stadium spectators amidst the coronavirus pandemic.
Those are our top stories for you this morning. Let's get to the markets. Equity and bond market volatility seems to be easing, at least at the start of this week. But we've got a raft of earnings, both for the US and Europe, plus US GDP. The forecasts for the first quarter GDP have really been slashed. The expectation, 0.4% quarter-on-quarter growth. In terms of Asian equities, modestly high. You've got the topics up almost 1%. South Korean shares this morning on the Kospi are also rising about 0.1%. Scott Bessent was talking about Asian countries are moving along very well in terms of the trade discussions. We had 4 days of gains for the S&P 500 last week. Futures, though, are down 0.5% this morning. European stock futures gaining 0.2. The dollar and treasuries are steady this morning. Gold is down 0.6%. 10-year US yields this morning trading at 4.25, up a basis point, Stephen.
In a moment, we'll bring you more on why stock investors are bracing for more dollar pain, plus why private equity now has defence firms firmly in their targets. But first, to another story that caught our eye this morning, something literally out of this world to start your Monday morning. Astronomers have discovered a planet that may have signs of life with the possible ocean and atmosphere containing water vapour and rain clouds. Now, the signs are still tentative. Some say it's too soon to tell, but there's certainly a lot of excitement about this planet, which is called K218b. Catchy.
Yeah. It is. Look, it's absolutely fascinating. So I had to go off and actually watch one of the videos from one of the scientists who made
off
this
to
discovery.
Space with you, Caroline.
Yeah, just to try to learn something about it. Listen, it's pretty complicated. And our Bloomberg Opinion science columnist, FD Flam, has been writing about this discovery too. Basically, she makes it easy for someone like me. Did we finally find life on another planet? The Cambridge scientist in the video says no.
Not yet. But, I mean, look, it's a story too about scientific cooperation, which is very interesting because there are different elements of this which have allowed them to at least, point to the potential that this could be the case, thanks to research for using both the Hubble telescope but also the James Webb Space Telescopes as well. And this is sort of collaboration is perhaps the key to the next big advancements in this area as well. Faye does have a note of caution in the piece as well, though, on to your point, Caroline, saying that, this is also something that's going to need new investment, particularly from the likes of NASA, to be able to try and advance these theories as well, and of course questions over NASA's budget and focus too, so perhaps some of these developments may not come as fast as some in the scientific community would like to be able to see.
And if you want to learn a little bit more about astrophysics and this discovery, of course we'll put a link in the show notes when you download our podcast.
Now, the market turmoil that's followed Donald Trump launching his global trade war has caused double pain for a common trade used by investors outside of the United States to buy dollars and invest in US stocks. Now traders are trying to guess what happens next. Our FX and rates reporter Alice Gladhill joins us now for more. Alice, good morning. Talk us through, first of all, how this trade worked and how popular it was.
So imagine you're an investor in Paris or Tokyo and you wanted a piece of the action in the red hot US stock market. So you buy some dollars to invest in some US shares. Now you have to remember, in the post-pandemic period, the US was very much the place to be. So the economy was more resilient, growth kept coming, and the labour market stayed strong. And there was little reason to think that this would break anytime soon. And that was still the case when Trump was elected president, given his pro-growth, America First policies. And that was expected to juice that sort of US exceptionalism trade, as it was called, even more. Now, for that reason, many of those foreign investors chose not to hedge. That basically means the hedge is basically buy insurance against dollar declines. So the thinking went, US stocks are going to keep going up, the dollar will keep going up, and that's going to boost my returns even more. So we don't know exactly how many investors were in this position, but we can make some educated guesses. So according to State Street, which is a large custodian, just under a quarter of non-US investors' holdings in US equities were hedged against dollar declines. Now that compares to nearly 50% in 2020 during the pandemic. Now we also know from Federal Reserve data that overseas investors had about 18 trillion of US equities as of December last year. Now, Bank of America did some number crunching, and they reckon that if investors were to increase hedge ratios to the average level seen before the pandemic, there'd be about 5 trillions worth of equity exposure, which would need hedges to be put on.
So that sounds pretty painful then. In terms of what investors are expecting to happen next, then if if fewer have perhaps hedged, are they betting on the dollar remaining weaker? Do they have clarity?
It has been pretty painful. So I think, someone mentioned earlier, 6% decline in the S&P 500 this year has meant a 14% wipeout for investors who measure their returns in euros and yen. So in terms of what's going to happen next, I think it's a mix. There's lots of signs that some investors are starting to build hedges against further weakness in the dollar. That's based on anecdotal evidence from FX traders at banks like Morgan Stanley. You can also look at FX options markets, which show demand for hedges creeping up this year. But we also spoke to some investors who are holding out. So they say they've never liked hedging because of the cost associated with that and because it's so hard to predict the twists and turns of the dollar. So kind of why pay up for that insurance when you just don't know if it's going to pay off? And they're sticking with their US stocks because they like the investment case or the story around that company. There's also a decent sized group of market watchers who think the dollar is now oversold, and it has bounced off a 16-month low that we saw last week, although it's still around the lowest levels we've seen over the last couple of years. And a lot of people do think this is only the start of a major structural decline in the dollar. And then we know that plenty of people are divesting from the US altogether, which I think has been one of the key drivers of the collapse in asset prices.
Okay. Alice Gladhill, our FX and rates reporter, thank you very much for joining us.
Private equity firms, meanwhile, are scouring for investment opportunities in European defence, chasing a sector that was once seen as toxic, driven by a historic shift towards increased military spending. Joining us now to discuss this story is Bloomberg's deals reporter, Sweta Gopinath. Good morning, Sweta. Look, much has changed with President Donald Trump in the White House. Who is looking for these defence industry deals then in Europe?
Good morning. We really have firms across sort of the private capital spectrum now looking at the defense sector. Now that it's seen as investable once again, as you were saying, you have the likes of KKR looking for new investment opportunities, Advent monetizing defense assets they already own. TKR, a European fund, is raising a dedicated 800 million euro aerospace and defense fund. CVC last year put together a team for aviation, defense and space deals. So really, it's firms across the spectrum here.
The sector, though, has been unpopular with investors, and not just for ethical reasons. Are the barriers to investing in this area just disappearing?
Those barriers are definitely beginning to fall away, even if they haven't entirely disappeared yet. Fund managers have sort of rewritten their internal mandates, mainly because they don't want to miss out on potentially lucrative defense bets. And regulators in the UK and in Europe as well have signaled they'll remove any blockages to capital flows to the sector. They don't want anything that prevents new capital formation in the defense sector.
And so when the Europeans think about this, I mean, Europe in and of itself has earmarked all of these billions of dollars of euros for rearmament, even though the plans aren't yet entirely clear from governments. What we do know, though, is that it will probably need, private capital and partnerships. What is on the cards then when we think about M&A? Because some of the M&A has already happened and some, as you've been writing about, is still very much to come.
Yeah, we certainly think there's lots more to come. And speaking to people in the sector, the expectation is that M&A activity here will ramp up, mainly because the defense supply chain in Europe is very much fragmented. So people see room for consolidation. And besides that, as we've been writing, any PE firm that already owns defense assets basically sees this as the moment to monetize those holdings, given that there's heightened investor demand for the sector, and more so because valuations in the sector are really rising. So we've had Advent, which we mentioned before. They just sold Cobham Satcom, which sort of provides antenna systems for ships and soldiers. It's also now looking to sell ultra-precision control systems, which makes these systems that help with missile launches. And we have Searchlight Capital looking to sell a business that makes safety gear for F-35 fighter pilots. And it's not just sort of exits and monetizations. We also have PE firms looking to make new investments, which will lead to more M&A. We wrote last week about Bain and KPS being interested in Iveco's defense unit, for example. So there's lots more M&A for sure.
How confident are these investors that this is going to be a permanent shift towards a greater ramp up in European defence spending? That perhaps, after this presidential term, that things couldn't just go in the other direction?
I guess there's always the risk of that, and private capital firms are certainly, I guess, adept at making the best of the macroclimate. So for now, at least for the foreseeable future, it looks like Europe will continue to invest in the sector. So they want to make the most of this moment.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.